Bitcoin price outlook, testing the $106,000 to $114,000 range as BTC USD approaches 110,000. Bitcoin BTC USD is currently at a crossroads, trading near the $111,000 mark after a notable pullback from its late August peak of 124,517. This recent dip has sparked a fresh debate among investors and traders. Is Bitcoin heading for a deeper correction, or is this just a temporary consolidation before it continues its upward climb? But here's where it gets controversial. The technical signals and market behavior send mixed messages, making the next moves anything but predictable. Bitcoin's recent performance shows it shedding close to 11% over the last 3 weeks. It even briefly tested a low around 107,270 before managing to bounce back and hold just above the psychologically important $110,000 level. At present, the overall market capitalization hovers near $2.2 trillion, with daily trade volumes fluctuating wildly between $22 billion and $90 billion, a sign that liquidity is tightening and the market might be bracing for a bigger move. While supporters highlight the strength shown by remaining above 110K, bearish patterns are clearly forming on daily charts, characterized by a series of lower highs and lower lows since the all-time high. The recent candlestick formations, small-bodied candles and doji patterns reflect market indecision, with trading range narrowing between 110,032 and 111,369. Looking at the technical picture in the short term, support for Bitcoin seems to be clustered somewhere between $106,000 and $100,000. This zone is particularly significant because it aligns with the 200-day exponential moving average, EMA, at around $104,521, combined with the 50% Fibonacci retracement level from its prior rally, as well as the well-known psychological milestone of 100K. Should Bitcoin fail to hold these critical supports, many analysts warn it could slide further, potentially falling into a deeper slump between $95,000 and $78,000. Veteran market analyst Peter Brandt, for example, points to these lower levels as key areas to watch for substantial downturns. On the upside, immediate resistance is identified between $113,000 and $114,000. Breaking past $112,500 with strong trading volume would be essential to signal renewed bullish momentum. Indicators add layers of nuance to the outlook. Momentum oscillators such as the Relative Strength Index RSI currently sit around 46, the Stochastic Oscillator approximately at 44, and the Commodity Channel Index CCI registers near -28, all pointing to a neutral or slightly weak momentum phase. Interestingly, the Moving Average Convergence Divergence MACD has begun to show mild positive divergence, suggesting a potential early sign of a trend reversal, but this would need heightened volume to confirm. It's important to understand that Bitcoin's recent struggles are not occurring in a vacuum. Historically, the month of September tends to weigh heavily on Bitcoin's price. Since 2013, September has averaged around a 3.77% decline, making it the least favorable month for BTC. Adding to the pressure, a recent non-farm payroll (NFP) report showed weaker than expected job growth, pushing U.S. unemployment up to 4.3%. This labor market softness often drives risk aversion in markets, contributing to Bitcoin's rejection above the $113,000 level. Over the past decade, similar shocks in employment data have often preceded crypto pullbacks ranging from 15% to as much as 25%, which aligns with current bearish scenarios. Yet, zooming out provides remarkable perspective. From its first recorded price of $0.0099 in 2009 to reaching over $110,000 in 2025, Bitcoin's price surge reflects an astounding growth of more than 11 billion%. It has also seen an 18.5% gain year-over-year in 2025, following a remarkable 121% rally in 2024. Institutional involvement is reshaping Bitcoin's landscape like never before. Over 690,000 BTC have been acquired by investment funds and corporations recently, vastly outpacing the 109,000 BTC mined during the same time frame. MicroStrategy, now rebranded as Strategy Inc., remains the most notable corporate Bitcoin holder. Another interesting player is Metaplanet, a Japanese company listed as MTPLF, whose stock has endured 12 minor bear markets over the past 18 months, averaging drawdowns of 32%, including a staggering 78.6% crash in late 2024. These corporate fluctuations do not always correlate directly with Bitcoin's own price moves. Market strategist Mark Moss has introduced the idea of a 1-to-4 ratio, highlighting that treasury companies experience about 4 market cycles for every 1 Bitcoin cycle, significantly amplifying risk for investors holding corporate Bitcoin equity. This disconnect raises intriguing questions about how traditional equity investors should perceive Bitcoin-related corporate assets. The well-known Bitcoin halving cycle, long considered a key driver for price spikes, is now under increasing scrutiny. Analyst Plan C points out that there have only been 3 recorded halving events so far, which is too limited a sample size to reliably forecast future price cycles. The dynamics of the current 2025 rally differ markedly from past events. Instead of supply reduction from mining cuts, this rally has been propelled more by inflows into Bitcoin exchange-traded funds, ETFs, and aggressive accumulation by corporations. With miners currently producing a comparatively modest 144 Bitcoins BTC daily, their influence on price setting is waning. This pivot towards institutional behavior means traditional strategies based purely on halving cycles might be becoming obsolete. Is it time to rethink the entire halving narrative? Meanwhile, as Bitcoin consolidates, investor focus has shifted toward altcoins that offer the potential for outsized gains. One standout is Remittix, RTX, a PayFi project facilitating crypto-to-fiat payments in over 30 countries. With more than $20 million raised and listings on major centralized exchanges such as Bitmart and Lbank, Remittix is attracting attention. It boasts locked liquidity and team tokens for 3 years and has passed comprehensive security reviews, including a full audit by Certikick, emphasizing its utility-driven approach. Notably, RTX's momentum is rising alongside Bitcoin's stall around $111,000, echoing patterns from past cycles where Bitcoin's corrections triggered 20 to 30 times gains rotating into mid-cap altcoins. Similar dynamics are seen in pre-sale tokens like NextChain, which raised $10 million at an early-stage 27 price of 0.108 per token, with forecasts projecting growth towards 0.30 cents. Investor psychology remains a powerful driver amid market flux. Historically, the fourth quarter has been exceptionally strong for Bitcoin, often delivering gains above 85%. However, relying solely on seasonal trends risks becoming a self-fulfilling prophecy that traps investors. Presently, Bitcoin dominance in the crypto market stands at 56.5%, down from roughly 60% in July, signifying a gradual shift of capital into altcoins. Meanwhile, so-called whales, large holders of Bitcoin, continue to accumulate. Data from Glassnode reveals